Alright traders, I am back again with another video, and this time we're going to be looking at the Aussie US dollar bouncing off of resistance with a possible chance to trade to the downside. Now we're not sure how much of a move we're going to get to the downside because eventually price may try to break this level, but I think we have a chance to get a good trade right now. Look at this level right here first. This level that I got drawn with the line right here. Look how strong this level has been in the past. You had a few breakouts above it, but then the price just fell right back down. So price has failed to violate that level for quite a while here. So let's go move in a little closer and see what we're looking at. So last week we had a lot of news for the US dollar, which really drove this up here because we were still looking at a short opportunity, but price was pushed all the way back up from this support level here. We bounced off of the support level and price just flew back up to the top. All right, but now we've hit that top and it looks like we're starting to see some weakness as we've approached that top. So let's move into the 4-hour time frame because that's where we're going to really get our trade. Now you can see we're trading inside this one candle here. Now we had a slight breakthrough above the level, but then price fell back down and it looks like we're trading inside of this one candle. So let's go to the 4-hour time frame. Now on the 4-hour time frame, I really wanted to be in this trade at the break of this level right here when we came outside of the zone here. This is the support and resistance zone. So this is our resistance zone. We should have our stop loss a little bit above the wicks here, and you can see there's some bearish divergence here as price is hitting the upper level here. Now I'm not sure how far of a pullback we'll see. We're getting a little bit of distance on Kijinsen, not much, and I don't see much of a sign of the cloud to tell me that the trend is all the way over, but it is thickening, showing some volatility there, so that's a good sign. We still have a good 2.5 hours for this candle to close, so depending on how far it closes will decide if you want to take the trade or not, because you don't want to have a stop loss that's too big. Now some people would have taken this level already, and I have no ill regards against that because we had such a big rejection here and price never violated that rejection. So with that rejection, if you can take a trade and price does not violate the upper rejection level and you can get your entry below that wick, then that's a good entry if you ask me, especially if you're looking at a rejection candle at resistance. All right, support or resistance. Now it looks like we're going to close inside Tinkinson maybe, but again we still have 2.5 hours to go. If we close inside of Tinkinson, you can see this drop to the downside. Now my first target's definitely got to be this level here, so just got to shoot for this target first. All right, because you want to get to that point at least. Let me get this out of here. I put too many of them. And my computer is going really slow right now. Having issues with this computer because I downloaded Motive Wave and then it started really slowing my computer down, and I found out it was eating up a lot of space. But here you can see, guys, if we get our close here, we definitely want to shoot for this target. Then we want to look for the Kijinsen. Then once we get there, we'll see what happens because maybe we can violate that level. We'll probably get a pullback by then, and then we'll see what price is going to do. But first we want to shoot for this level here at about 76,719. Then we're going to shoot for our Kijinsen. You could go back to your daily, see where that daily Kijinsen is, and then we're going to probably shoot for that level afterwards because you're going to probably have this flat Kijinsen as you can see here, and then we'll have a lot of support from the Kijinsen and the cloud. Your TK crossover is bullish, but everything's starting to line out here, flatten out, because you're starting to become sideways in this market. And when you see Ichimoku getting sideways, then a lot of it is not going to hold up for you as far as support and resistance wise. All right, so you could see we're in between two levels. We're in between this zone, this range here. So we pretty much started the range here, bounced up here, came back down, hit up here again. So I'm looking for this to drop to the downside. So this is the trade that we're looking at now with the Aussie US dollar. So guys, good luck. Hope this works out for you. Remember a couple things here. Number one, trees that are slow to grow bear the best fruit. All right, remember that. And basically what I'm saying is take your time and let your trades develop your trade. Go with your strategy. Don't try to jump in ahead of a trade. Wait for your signal, your setup, and everything. And once you get that, then you take your trade. Because if you wait and be patient, usually you're going to get the better opportunity. but when you jump the gun, you're probably going to get stopped out, and then the market's going to go your way anyway because you're too early. You're trying to beat the market. Don't try to beat the market. Try to take some money from the market. All right. So that's it, guys. Hopefully this works out for you. Until next time, have a great one. God bless. So long. All right, traders, I am back again with another video, and basically just want to give you an update on the trade that we took yesterday, the Aussie US dollar, see what's happening with it, and talk about a couple little things. We got a bear trap, a bull trap here, and that's one of the things that probably was a tough trade to take at this point. But let's look at this on a daily time frame first. So looking here, we see we were looking at this trade. When we got into the trade, it was off of the 4-hour time frame, but we knew this was a strong resistance level here because of the past history, and you could see what happened in the past. So as price bounced on that top level, basically we had a little bit of divergence right here. So that's what we wanted to take that trade on. And then you could see we figured the trade would at least make it down to this level. That would be our first target here, and that comes in at 76,678, right? So we're kind of trying to violate that level. Now we're on a daily time frame, so we need to see what's going to happen. Now we want to watch and see. Ichimoku basically still looks a little strong to the upside. Your thick cloud was defining this area back here, but we're trying to angle out here, and you could see that the market had some movement here. That's where we got this angulation from the cloud here. But now we need to continue that. So we got a crossover that's bullish, but we had a crossover back here that was bearish. So we were kind of sideways. So looking at that, we were looking at this level and then bouncing here. So we started here up to this level, bouncing on this level. So let's see if we can get through this point. So let's take Ichimoku off the chart so we could really see what's happening here. So taking it off the chart may yield us to think that we could approach this level. So that will be our long-term goal. We need to get past this level where we are here, and then we'll need to get past this fractal level here coming in. That level here is coming in at what, 76,329. So we'll need to get past that level. So I'm going to mark it here, 76,329, right? So we'll just put a, we'll put that in here, and we're right on the nose with it. Okay, so we need to get past that level there, and then if we get past that level, then we could start looking at really attacking this level down here. So this trade was tricky here. Okay, so let's first go to the 4-hour time frame, and then we'll come back to the daily. I'll talk about the bear trap, the bull trap, sorry. Even on the daily, even on the 4-hour here, we had a kind of a bull trap, but not a major one like we saw on the other pair. Now this may have spiked you out if you had your stop loss exactly on this level here. I always talk about putting your stop loss a little bit above that level. So where would that have been? Let's see, you just put your level a little bit above, you're going to be pretty close. You see, if you're right there, you're going to probably get stopped out if you're right there. Now a little bit above, you still probably, depending on how far you put that stop loss. So the market came and attacked us here, and there's reasons why it came and attacked us there, because this is a main level, a known level by many traders, by many institutional traders. As you could see how strong it was going back to the daily, you could see how big this level was and how many times it's been attacked here. Well, institutional traders know that retail traders are looking at this level. So what they want to do, basically, knowing that we put our stop losses up here, they want to attack that level. So they attack that level and then get the stop losses and drop the market down. Now there's other things that happen here also, so I'm going to go to you and show you, because support and resistance levels aren't as easy to trade as you may think. They're a little bit tough to trade because at these levels you have a lot of things happening at these levels. You have indecision at these levels, you have rejection at these levels. When you have indecision, you have bears and bulls trying to make a decision, and just as causes the market confusion, and then you have traps being set at these levels. So let's go to the daily. We'll look at what happened here. So this was a tough one. We followed everything right, did everything right. Some of you would have got stopped out because look at this major bull trap here. What happened here was the market went higher and then it dropped a little lower. This brought in some bulls already from the thinking about a breakout. Then the market drops a little. Then they push the market up a little bit. You know what? A lot of people jump in here. A lot of people get happy, a lot of people jump in here. They went just a little bit above our level, and then they went all the way down and closed below the level here. That's a major bull trap, all right? And now the market continues to move to the downside. All right, we need to get through this level, as I said. So looking at that as a bull trap, guys, that was hard to overcome. I mean, when you look back at some of the other entries, they didn't have some of these traps that we had here. Now, if we go back farther, we probably could see a lot of things happening. But remember, at this level, there's so much happening. There's so much indecision. There's so many people taking profit, so many people trying to get in the market, so much indecision, so much rejection, so much everything is happening there. So these levels aren't as easy to trade as you may think. So that's why when I tell you, when you see a big long wick candle, those are one of the major things you want to trade, especially on a daily time frame. So you always want to look for them on a daily time frame. So this wasn't a big wick candle on the daily time frame, right? But when we went to the 4-hour time frame, as we went down lower, we had a big wick candle here, and so that looked good. Even here we looked, and then we got triggered pretty much here, right? So when we got triggered, the market went opposite. The way as soon as we got triggered, the market went opposite on us. You guys thought we were in a losing trade, and then the market went even higher, took y'all guys out, took everyone out, and then went our way, the way we thought it would go. Just, you know, why did we thought it go that way? Because of this level here. But getting in the trade was kind of tricky. It gave us a great signal, and then tried to trap us, and then got us, and then moved down lower. So you got to be careful. Some of these trades are very hard to take at support and resistance levels. So just wanted to let you guys know that. Wanted to see how the profit is going if you were in this trade, if you took the trade, if you didn't get stopped out, depending on where your stop loss was. Very tough trade, very tough. Let me go back to the daily. So even looking at this, the best place would have have your stop loss would have been pretty high, and you would have probably had to be up this level here just to be safe, and that's very deep, you see, because the market could come right to that point. Even if we put it down to this level here, you want to look for these wicks and see where they're lining up and see where you're getting hit at on these wicks, as you could see. So if we went to these wicks here, and we're hitting everything here, so we pretty much feel like the market probably would hit this level right here, right? And the market didn't hit that level, but that's a big stop loss, guys. So I just really look at basically the area, what we have in that area, and it's pretty hard, guys. This zone here, we had a zone, we're above the zone, and the market just came and triggered us and got us and take us out and then dropped to the downside. So some of you guys are safe and some of you guys weren't safe. I'm sorry if you weren't safe, because this was a really tricky trade. All right, well, we'll be looking at some more things. I mean, you have to just keep trading the way that you know. Sometimes it's not going to work out, but the way that you know, if you keep doing it that way, be consistent with what you do. Don't change your rules. When you start changing too much stuff, you start changing the way you trade, and then you're all out of schedule, all out of whack. You're doing stuff different. Then you're basically changing everything. You're changing your plan. Then you're going to continue to do that. All right, but sorry about this trade if it didn't work for you, and the ones that it's working for, great. All right, all we follow is the market structure, basically support and resistance, and price action, and Ichimoku, and it all will work out for you. Until next time, traders, have a great one. God bless. So long.